fundsupermart.com.
What is your outlook for Asia in 2014?
We are cautiously optimistic on the Asian markets. I think with the start of the QE tapering in January, it has brought about basically an environment of rising rates. And we have seen that in the second half of last year, that has pressured quite a few of the Asian markets. We're optimistic because the start of QE tapering basically means that for the US, their view is that the economy there is recovering, and that's why they are doing this QE tapering. And when that happens, we have seen data whereby GDP growth, export growth is highly correlated with some of the Asian markets. So we're optimistic on some of the Asian economies which will benefit from this recovery in the US as well as some of the other developed economies.
Where do you find investment opportunities within Asia?
Within Asia, I think it will be, you have to be selective and also watch the timing. Simply because, for example, Thailand will have their elections next month. Indonesia will have their presidential elections in July. India will have their general elections in March and April. So these countries present opportunities. It's just a matter of timing. So we are watching these countries closely. Leading up to the elections, if things get sold down unjustifiably, then that's where we'll put our money into. So those are both the risk as well as the opportunities which lie in Asia.
What are some of the key risks for Asian equities?
I think the key risks are what we faced in the second half of 2013. And that would be because of QE tapering, we've seen currencies in Asia depreciate against the US dollar. And also partly because of a reaction of fund outflow from this region, from the emerging markets, developing markets, to developed markets like the US, Japan, and Europe. I think the key risk is fund flows driven because of QE tapering.
Are there any countries or sectors that you are not investing in or avoiding in 2014, and why?
I think we have reduced our exposure to Indonesia, Thailand because of QE tapering, because of elections as well. So those two countries, we have reduced our exposure, but at the same time, as the election risks play out, it is also where we find opportunities. So those two countries, including Philippines, are the countries that we have reduced exposure, but we still think there are opportunities there.
How is your portfolio positioned, and how are you planning to go about the business of investing in 2014?
Okay. It's very similar to what I mentioned earlier. So for the first half, we would reduce exposure, or we have already reduced our exposure to Thailand, Indonesia, Philippines. But at the same time, we are watching them very closely and look to increase our exposure post the election risks, as well as how the economy reacts to the QE tapering. In the meantime, our exposure is increased mainly to countries like Singapore and Malaysia, whereby it is more stable, less volatility as compared to some of the other regional peers. We have also increased our exposure to China through the Hong Kong market. And this is to play the themes that is ongoing there. I think post the change in leadership last year, they are going through a period of reform. And this period of reform will see more emphasis on certain sectors, sectors like clean energy, sectors like the healthcare, and so those are where we will actually put our effort and to look into ideas in those sectors. But from a top-down perspective, we are cautious on the Chinese economy, principally because of the reforms will bring about probably slower growth than what they have seen in the past decade. So in the past decade, you've seen growth closer to the 10% range year on year. But I think moving forward, the target is more towards the range of 7.5%, 7 to 7.5%. So I think the reforms will bring about slower growth, but at the same time, if we invest where these policies are into the sectors where the policies are supportive, then that's where the interesting ideas are.